Raamdeo Agrawal, Joint Managing Director and Co-founder of Motilal Oswal Financial Services, joins us live. Raamdeo, good morning, and let's start with the zing in your voice, Raamdeo. Markets are falling less, crude is down, earnings are strong, and your latest purchase, Tech Mahindra, is in the money. It's up more than 20% from your purchase price.
Yeah, so I think there is some relief. The investors are feeling a little better. Index is much more, stable. And we have not seen a lot of volatility in recent times. I think the real redeeming feature is that mid-caps have started performing. There's a lot of buzz about, buying one stock, and then after the result also, stock moves up by 20-30%. So I think that healthy trend is starting. And large cap in any case, people have sold out, and the retail per se is not looking at that. But still, the participation from retail is lacking, and if you look at that turnover or participation is as bad as what it was a month back or 2 months back.
Raamdeo, for someone who's missed out on the rally in Tech Mahindra, is the time still ripe for a buy?
Yeah. At least I don't buy for 1 or 2 months or 20%, 30%. I buy for a fairly long time. And if you see yesterday's Mr. Mahindra's interview, clearly it comes out that they are shooting for growth. Quality of the enterprise, quality of the management is not in doubt. And the management itself is saying that top priority is the growth, not the control freak. So I think that combined with the prospect for the business, prospect for the consolidation, and prospect for the kind of growth this company can achieve, I think still a lot of steam is left, not little bit, but a lot of steam is left, and as future opens up, you have to sit through this journey, because still trading at about 13.5 times current year. So significant discount to the index itself, 20% discount to the index. I think that itself is the first, destination.
So do you think a franchise like Tech Mahindra, Raamdeo, deserves to trade at a P multiple of TCS or somewhere in line with the P multiple of HCL Tech?
See, one other thing I like about the company is that they don't have succession issue. If you see our tech landscape, one of the things is that Indian tech is one of the shining example of what Indian entrepreneurship can be, and the absolute advantage the industry has because of skill and scale of the manpower we have here. So clearly that absolute advantage which you have in the global industry, that is garnered successfully by these 5-6 big players out of India. But unfortunately, out of those 4-5 players, quite a few of them are stuck with the succession issue. And only 2 of them, one is of course TCS, which is ownership and management is disconnected. So in the sense that disjointed. So they can pick up anybody, the best talent in the company, and the leadership can be what best can be. I think the next example is going to be Tech Mahindra, where ownership doesn't have anything to do with who runs the company. And I think that should command a premium in terms of valuation.
Raamdeo, the phrase which you aptly used in the month of October to describe the market action was high volatility, no return. How would you characterize the current market setup right now?
It looks that, it has been very stable. Now I think if it is not volatile for some time, I think volatility is ahead, in the sense that it cannot remain this cool for a very long time. Maybe some kind of a storm is building up. Maybe the election result has surprises, maybe negative or positive. I don't know. Whether the kind of rallies we are seeing, whether that translates into the ballot box or does it disappoint us. So a polarized rally, whether they are going to put into the polarized voting. If not, in that case negative surprises. If yes, in that case positive surprises. So one way or other we are going to have a little more volatile time going forward.
But if markets, let's say, correct or crack after the outcome of assembly election, would you be a buyer here? What I'm trying to really gather from you, Raamdeo, is that do you think the worst of market action and price action for Indian equities is over?
Nikunj, it is not about the worst. As I said, Tech Mahindra, if I have money, I'll buy whether market cracks, then I'll get a little cheaper. it is better. So I think I have never timed the market, and I have not ever been successful in timing the market. So, and in any case, when you have to buy Tech Mahindra, whether you buy it 900, 1000, 1100, 1200, I mean, it's a secular company which is not impacted by these day-to-day movements. I mean, it is dependent on what they do every quarter, what is their long-term vision, what kind of acquisitions they do, what kind of minority dividend policy they have. In the sense that I think one of the things which market doesn't know right now is that what kind of dividend policy they're going to have. So they have, as a group, they have a wonderful dividend policy. But whether the same kind of dividend policy is going to be followed in Tech Mahindra or not. So once those kind of actions become clear, the re-rating starts, gaining ground. So I don't think that is to do with the per se what's going to happen in the market in the next 15-20 days.
Raamdeo, how does one approach United Spirits? I mean, given the kind of stock performance one has seen in the past and given the news flow now, and I mean, really, one often wonders what explains the kind of stock volatility we saw yesterday.
Yeah. So I think the quality of change in the management and a management which is global in character, which is the best by far in that particular industry anywhere in the world, they will not only be able to exploit their very unique position of the company's monopolistic or duopolistic position which they have in the country, and their global knowledge of how consumers behave, how to take the prices of a liter of liquor up and give consumer advantage also, in the sense that sell the 300 rupees bottle for 500 rupees and yet make you feel that you're buying very cheap. So that competence is there only with Diageo. So I'm quite sure the shareholders, long-term shareholders in this particular company is in for a good treat.
Raamdeo, from last 2 years, more than earning expansion, we've seen a massive P expansion because of global flows. Are you getting a sense that now earnings will also catch up?
I don't think conditions are set for earnings to grow dramatically. But I think what has surprised me is that this about 1 lakh crore per quarter profit. So we are at about 4 lakh crores kind of profit right now, listed corporate profit, and that has not cracked. I mean, on aggregate, it has not cracked. Of course, sectorally, cyclicals and the weak companies, they have definitely cracked. But per se, on aggregate, it has not. I mean, every year has been methodically higher, though growth rates have slowed down. But what will take the growth rate up? I think we need a whole lot of maybe liberation, maybe support from the global growth. Currency is now settled at a much higher level, or 60 plus kind of situation. So I think this governance part of it, decision making has to speed up, and somebody has to start looking at the problems of the businesses so that businesses can expand and do more businesses in the global economy. So I think these elections, whatever decisive government comes out, I think that will make a difference. So I don't think 13-14 is gone. Maybe 14-15 will also go in preparing that. The real takeoff in the growth in the earnings would probably be in 15-16.
Raamdeo, the price action in cyclicals, industrials and metals seems to be indicating that markets are confident that the rate of change now for the economy related stock would be constructive. So for those who are buying these beaten down stocks, are they smart investors, or they're taking a big leap of faith?
See, these are contrarian buy. I mean, these large unpopular companies, they had been beaten down to abnormally low levels, and some of them are still lying there. So when the hope comes in the economy, which is there for last month or two, we have seen the rally coming to these stocks. But if the hope is belied, in the sense that mandate is not the liking of the market, it's completely fractured, then clearly again this rally will turn out to be a false rally.
Raamdeo, a lot of money has been made in names like a Tata Steel, and people were banking on what the European business may do, the way the currencies are panning out. Is that just a near-term trade, or do you also believe in the long-term prospects of Tata Steel?
See, very long-term prospect of Tata Steel is not at all in doubt. I mean, they literally mint gold in India. I mean, their capital allocation has gone haywire by putting $10-12 billion in Chorus UK. And I think now that is getting corrected in the sense that the management decided to write down the investments out there and, kind of sell assets sporadically. And maybe they might be deciding to completely downsize their exposure to European market and relentlessly increase the investment in India, because now going forward, management like Tisco will get priority in terms of putting up plants in Orissa and Jharkhand and all the places. Because if they can't get their steel plants up and running in India, I don't think anybody else can do. So I think prospect for Tata Steel long term is not bad, it's good. It's just that the current earnings and profitability is hampered by the capital allocation which they have to the Europe.
So Raamdeo, if quality dominated Indian markets for 2013, what really could influence the script of 2014? We've got elections, we will hear from Fed, we will get something from RBI.
Yeah, a whole lot of things. But I think still there is no, I don't see a booming kind of condition in terms of earnings side at least. I mean, world can become euphoric about India in terms of sending $50 billion or $100 billion of buying, or domestics becoming very bullish on prospects of political change and hence the prospect for the economy, and that can re-rating of the existing earnings can kind of surprise us in next 1 year. But I don't see earnings prospects changing materially in next 12 months.
Raamdeo, what have you made of the consumption space? I mean, we've seen a fair amount of run-up in names like a Just Dial, or for that matter, Titan, as well as Jubilant Foodworks of late.
Yeah. See, one of the things we have seen is that wherever there is a quality of business and quality of management, and if with that growth is combined, then there is no stopping, irrespective of the valuation. Whether it is an Asian Paint, whether it is a Just Dial, whether it is a iShares or TechM, TCS, even now Infosys is joining. So, these 20-25 names, wherever there is a quality, growth and longevity of the franchise, I don't think the valuation has mattered. The valuation is all in the minds of the investors and mutual fund managers, not in the mind of the market. Market has been relentlessly moving wherever there is a quality and growth.
So is one better off still owning Asian Paints, ITC, Bosch, names which have worked in the past? Do you think they will work in the future as well? Because, it's human tendency to think about new ideas, find new multi-baggers. What you're saying is that don't do anything silly. What you've identified, just stick to them.
Nikunj, you cannot have a portfolio of only multi-baggers, because multi-baggers fail also. For one big multi-bagger, you have to bring 10 kachra in the home. So you have to build up a steady state, I would say 2/3 should be buy and hold kind of very long-term stocks like say Nestle or Glaxo or Bosch and Asian Paints. If by chance, because of your good luck, you have some point of time, you got into your portfolio, don't send them out, because longer term, they are the companies which are going to create a big amount of wealth in for the portfolio. Though the pace might be a little slower. And then on top of it, you want to put a icing on the cake and say, okay, that is growing at 15%, 17%. Let me bring something which is going to go at 30, 40%. Still, I don't want to compromise on the quality. And then you come out with some of the ideas which sits as a portfolio on top of it. And of course, you commit mistake out there. So keep clearing up whatever is the mistake and keep riding the successes.